I want to welcome you to our third edition of BWARP 2023, the Black Wealth Attainment and Retention Program, presented by the Los Angeles Urban League in collaboration with Parkside EDC. BWARP was birthed from a conversation Michael Lawson and I had about gentrification, declining home and business ownership, lack of financial resources, and education available to our community. Thus, we present BWARP, workshops featuring qualified, concerned financial and well-being experts that educate, motivate, and inspire us to attain, retain, and pass down legacy wealth. Our short-term goal is to close the wealth gap between white and Black households. Our long-term vision is to help create Black Wall Street right here in Los Angeles. I want to thank our partner, the Los Angeles Urban League, for their commitment and tremendous support of BWARP. In the coming weeks, we'll cover preserving your assets in tough times, crypto, should we cash in or cash out? And last but not least, we're going to talk about the wealthy mind and body. We all know without a sound mind and healthy body, our fruits of labor are all in vain. So as we conclude Black History Month and embrace Women's History Month, tonight's presentation features two dynamic sisters that are contributing to changing the course of the financial future of their families and our community by encouraging all of us to join the Smart Investors Club. If you have any questions during the presentation, just put them in the chat or the Q&A, and our virtual producer, Jacinda Moden, will make sure you get an answer during the question and answer portion of the program. Tonight, we'll explore individual investment strategies with financial advisor Anita DeAguilar. But first, we're going to have a conversation on collective investment opportunities with Investment Club portfolio manager Shirley Worrels. Shirley belongs to a stock investment group comprised of 27 African-American women. For over 25 years, this group has used stock investing as a mechanism to create a path to sustain wealth for themselves and their families. Shirley is a native Angelino with a BS in psychology and a master's in hospital administration. After spending 30+ years as an administrator overseeing operations for several primary care departments at Kaiser Permanente, she transferred her acquired knowledge and skills to serve and be an advocate for her community. Shirley has served on the California State Commission as a California State Commissioner for the Neuropathic Medicine Committee, and she is currently president of the Baldwin Hills Estates Homeowners Association and was an integral part as campaign coordinator for Mayor Karen Bass's successful run as mayor. Shirley was also the lead on Parkside scholarship throughout the last 10 years or so. And if it wasn't for her, Parkside Scholarship Program would not be the great program that it is today. So Ms. Worrels, welcome to BWARP, and thanks for sharing your story of your club's 25 years of successful investing. You there, Shirley? Unmute yourself.
Thank you so much. I am so pleased to be here tonight.
Well, as we take a look at the picture on the screen, it's the anniversary photo of your 25th anniversary of this successful Black female investors. Give us a little history about the structure of the group and how it all came together.
Thank you so much. The Sister Circle Investment Group of Southern California, and I think it's very fitting that I'm here during Women's History Month, given that we are a group of African-American women who have the distinction, as you said, of being together for 25 years. I have grown exponentially in my knowledge of money and the stock market from being in this group. I joined in 2006. And by the time I retired in 2014, I had successfully co-managed my 401k plan. And I have to say, it looked pretty darn good when I retired in 2014. And I could not have done that without the knowledge that I gained from being in this club. Our founder, Connie Diggs, had a vision, and her vision again was to create a mechanism for African-American women to sustain a successful path through stock investing. She has since made her transition. However, we are determined to carry on her legacy.
So as portfolio manager, tell us how you determine what stocks the group should consider.
Well, we meet monthly. Now we're meeting, well, for the past 3 years, we've been meeting through Zoom, and that was a hard transition for us because we were used to meeting face to face. But when we meet, we buy and sell stocks. We have an education presentation each month, and that's presented by one of our members. And if we have a stock that we'd like to consider, we have a mechanism for researching the stock. We send it to our researcher. And we have to make sure, of course, that it meets our established criteria. And that's based on a few factors: historical earnings, 52-week highs and lows, market cap, whether it pays dividends or not. And then we present it to the group. And that's the hard part, because once we do our research, then we have to convince the majority of the women who are our members that it's worth purchasing. So that means that it's not always easy to do. You have to know what you're talking about, and you have to convince the entire group or the majority of the group that this is a stock worth having or a position worth having in our portfolio.
Well,
And we've taken the Warren Buffett advice, and we have many value stocks in our portfolio. And value stocks are stocks like Costco, Amgen, Pepsi, Waste Management, Walmart.
okay, the stuff that we know has some staying power.
Yes.
And with the market being as volatile as it has been, have you developed over the years a way of protecting your profits?
I agree that it is volatile, especially in the last few years. And I have to say that stock investing isn't for the faint of heart. Besides investing through our group, I actually have my own portfolio, stock portfolio. But we protect our profits by placing what we call stop orders on each of our positions. And just as an example, we may have purchased, and this is hypothetical, purchased Costco at an average cost per share of $75. And that could mean that we might have purchased 30 shares at $25, another 100 shares at a different time for $50, another 25 shares for $60. So at any point, we look at the average cost per share of that acquisition. So now we have a stock that has an average cost per share of $75, and its value could be, say, at $400. So we want to protect our profits. So we put a limited stop for about $360, and that could change any month depending on where the stock is during the month. And if the market starts to dip and Costco gets to, say, $360 because we put a stop there, the sale is triggered, and that protects the profit that we've made between the average cost of $75 and the $360. Now, this helps tremendously because we only meet once monthly. And if something drastic happens, we have some level of protection.
Okay. So if you, as the person that has their eye on things, if you see something concerning or you see a great opportunity, but it's not time for a meeting, how do you communicate that to everybody if it's something you need to take care of right away?
We're a very organized group, and we have policies or processes in place to address things like that. So we do have the stops. I do check it a couple of times a week. And for the most part, I don't do anything unless there are drastic dips. And of course, in the last year, that might have happened 3 or 4 times, but I'll check it more often if it really starts to plummet. And then we have, again, a mechanism to contact everybody, have an emergency meeting, and make decisions based on what's going on in the market at that particular time.
So Shirley, I have to ask this question because 27 women getting together and staying together for as long as we have, there has to be a passion there. So why are you so passionate about sharing the longevity and the success of this club? And how do we make that a poster child for, as a community, we do the same?
Accumulating wealth in the Black community has a really far-reaching impact beyond what we do individually. Our mission was to educate, teach others about an area of finance that people of color have been reluctant to endeavor. Our families benefit by building generational wealth. We also make a commitment to spending money in our community when given the choice and the opportunity. We educate others so that they too can think beyond a savings account and a few dollars under the mattress. Mm-hmm. And many people in our community are afraid of the stock market for good reason. The stock market can be scary, but it's also a great mechanism for achieving your short-term goals and your long-term goals. So I would say to people who aren't interested in a stock investment club, if you work for a company, if you are fortunate enough to work for a company that has a 401k program, you should learn as much as you can about stock investing so that you can make better decisions for helping manage your portfolio and learning about the stock market.
So for those who are listening and may be interested in getting together with a group of people, family members or friends, and doing this, what do you believe are some of the key benefits of being involved in an investment club, and particularly for those who are a little frigid and don't want to do it on their own?
Well, starting an investment club is probably not as easy as it was when we started. But like any organization, you have to have people with the right skill set, and we do. We have a razor sharp attorney, and she keeps us on the straight and narrow for everything. You have to create your mission and your vision. But there is a magazine called Better Investing that has been very helpful for us since our inception. I strongly recommend anyone who's interested in starting a stock club to read Better Investing or get a subscription to Better Investing, because their focus is on investment clubs. And they help you to understand the structure and just a lot of really good information that you would need to be a successful club. We have been featured in the club in the past, and since we celebrated our 25th anniversary, they will feature us again in an upcoming one of their upcoming
additions.
Yes, that's what I'm. But and if anyone is interested, unfortunately our club is at capacity, and we haven't had any openings in a while, but I am more than happy to talk to anyone who might be interested in starting their own club.
And that was leading into my next question, which you've kind of partially answered, the steps to getting started. If somebody is interested, aside from calling you, what other things do they need to be thinking about and having in play before they start contacting other people to join?
Well, I would say that you have to start it like any other organization. You just have to be clear. Yeah, you have to be clear on your focus and do your research, do your homework, find out about stock investment club strategy, And then you kind of go from there. But I think the key for us is just having the right skill set, the right personalities. We are all committed to each other. We all trust each other. And at the very beginning, there was somebody there that just said, who guided us through the process. So you have to have one or two people who are passionate about this and then just go for it. It's a learning experience. None of
Right.
us knew anything about stock investment prior to this. And I think that everybody, all the women who are in the club now are probably, consider themselves experts. And we're bringing in younger women, of course, to carry on the legacy. And they ask questions. They are dynamic. They ask questions, so we know that they're getting it.
Well, Shirley, as we said at the beginning, this is Women's History Month, and to have you highlight your organization, give us the name of the organization again.
It's the Sister Circle Investment Group of Southern California.
Well, the Sister Circle Investment Group of Southern California is definitely making history, and we hope that it will encourage others to do the same. It may not get to 27, but if you can get a group of people together and make money together and consider the long play, it's not something you're going to jump in and jump out of. Like you say, 25 years is proof to that pudding. So I want to thank you so much, Shirley, for sharing the success of your organization and your personal insight in investing. And now we're going to transition and hear from our financial advisor, Anita DeAguilar, who has a mission. Her mission is to assist clients to becoming good stewards of their wealth by incorporating their values and principles. Anita has over 20 years of experience in finance wealth management services. Her practice includes recommending socially responsible investments and integrating them into a long-term financial strategies. She works with highly successful individuals and families whom investing is an additional means of supporting their ethical and social priorities, as well as their family and the lifestyle that they want to live. Her education includes a Bachelor of Science from the University of Redlands and an MBA in finance from the University of Laverne. And she also has a certificate in financial management at Pepperdine Graziosi School of Business Management. Ms. Aguilar has been featured in Profile, Diversity, Black Enterprise, and Forbes magazine. Her favorite quote is from the late Archbishop Desmond Tutu, who provides inspiration, I should say, for her work. And that quote is, "My humanity is bound up in yours. For me, we can only be human together." Anita, thanks for sharing your knowledge with BWAARP this evening.
Well, thank you very much. And I have to say, I'm fired up after hearing your musical selections. And for those of you that don't know the entire story around the Archbishop Desmond Tutu quote, it's very inspiring to me. I fortunately had the great pleasure of visiting South Africa, and I was involved in a nonprofit called Artists for a New South Africa. We actually hosted Archbishop Desmond Tutu. So there is a tremendous inspiration around him and the country. Thank you very much for that illustrious bio summary. I appreciate it very much, Reverend Gerald. In sharing the 25-year experience that I've had in this industry, I think it's really important to sort of highlight my earlier start at Merrill Lynch, because what happened is something very dynamic. I had been featured in Black Enterprise, as you mentioned, and I got a phone call from an African-American employee of one of the Baby Bell telecommunications companies. And she said, "We've heard from so many of them in terms of educational planning, transitioning for retirement. Do we take our 401k plan now? Do we take it later?" She says, "But we haven't heard from anyone of color." She said, "Could you come in and make a presentation?" And I said, "Absolutely." I went in, I made a presentation. Things went so great that I ended up working and developing a niche in IRA rollovers for the telecommunication industry. So I share that story because of the power that we have collectively. to transition from there, I also wanted to just sort of piggyback on some of what Reverend Gerald has been discussing, which has to do with our wealth accumulation. And when he and I first had our first conversation about this evening, he asked me about wealth accumulation. And unfortunately, the numbers would tell us that whites have 8 times more wealth than we do. And it would also tell us that the average retirement account balance for whites is 142,000, whereas for blacks, it's about 31,000. The statistics would also share that any retirement balance over $250,000 is represented largely by whites, with over 31% having balances of 250 or greater, and only 14.5% representing that of blacks. So there is certainly a disparity when it comes to wealth. We're going to talk about it a little bit more. I guess we're always wondering, what is it that we can do to close the gap? What is it that we could do to power forward? And, you know, what is it that we could do to pivot? So I wanted to start the presentation with a deck, which is titled Planning for Retirement, but I really like to reference it Planning for Retirement Success. And Jacinda, if you would please go to the first page, I'd appreciate it. Well, this is pretty straightforward here. And this is where we get into the actual planning. And I like to just sort of highlight something that's not actually on the board, but this is really, really helpful when I have my meetings. And I tell people to think about the 4 keys of success, retirement planning success. And I just like to give them the acronym in summary, SAVE, that's SAVE. The S stands for start early. The A stands for address your debt. The V stands for valuable financial education, as we heard from with the young lady that spoke before, that was Shirley, and she talked about how important it is to stay in the conversation around education because things are changing so quickly in the investment world. And lastly, the E is for exploring all income sources. We're going to talk about all of those in more detail, but again, just keep the acronym SAVE in mind. Now, when we look at this slide, we say, how much will we need? Well, that really depends on lifestyle. Everyone's lifestyle is different. I will say that part of attributing to our generational wealth, which is financial assets that are transferred to the next generation, there are several things that contribute, which I think that the Urban League has mentioned. Home ownership is one of them, personal savings, as Shirley mentioned, investment clubs, and then there's the retirement piece. And that's the sleeve that I'm going to discuss. And when I discuss that piece, I'm saying, what's the life that you want to live in the future? And it's so important that you get an early start with the corporate retirement plans, as I think Shirley mentioned, because it's so powerful to be able to take advantage of a forced savings. As she mentioned, you're basically buying into the marketplace at high points and at low points, and it really makes a difference. For example, if you invested $680 a year, going back 25 years since 1998, assuming a rate of return in the Standard & Poor's 500, the S&P 500, of 8%, the value today would be over $1 million. It would actually be $1,025,000. So it's really, really key to get an early start, to contribute the maximum if you can. And for those of you that don't know, the contribution limits just went up. And so they're $22,500 and another $7,500 if you're over 50 years old. So that's $30,000 a year for those of you that are in a position to do so. If you're not in a position to do so, in terms of the maximum contribution, do what's comfortable for you. The other thing that I wanted to mention here was some people, you know, they're anxious. They want to know how quickly they could double the value or the balance of their retirement plans. And there's an old-fashioned rule of what we call 72T. And you basically take the number 72, you divide it by the rate of return, and that gives you the number of years that you can double your principal. So for example, if 72, divide that by 10, if you're getting a rate of return of 10%, and that's 7.5 2.5 years roughly that you would double your principal. Shirley, can we go to the next slide, please? Why is planning important? Well, people are living longer. We're going to see a slide coming up soon, but the average age now of a female, I believe, is 85 and a male is 82. People are living a lot longer. People are typically in retirement now for about 30 years on average. We find that Social Security benefits are not enough for most retirees. As you can see here, about $3,200 a year, and this is through 2022. Medical costs is considerable, and it is exorbitant. 65-year-old couple now retiring in 2022 will need an estimated $294,000 to cover their health care. I did the numbers, I worked backwards. That means you need to save an additional $15,000 a year. Again, assuming you're going to have about 30 years in retirement. The next slide, please. This just further explains the life expectancy tables here. We don't have to spend a lot of time on it, but again, 30 to 35 years for a non-smoker is what's pretty much expected now. So much longer years in retirement. And the next slide is how much can you spend? There's sort of a rule of thumb, which we call the 4% withdrawal rule. And that basically means that, well, first of all, I think you might have actually jumped ahead, but on page 3, they talk about, actually it's one ahead. There is a sort of standard where we look at the amount of money that you have in terms of the income that you're earning. And roughly 80% of the income that you're earning is what you would use for retirement. So if you're making $100,000 a year, 80% of that is what you would more than likely need in retirement. Now, again, each individual is different, but 70% of the retirees report that they are spending at least that, if not more. Here. How much can you spend? Again, lifestyle is very important. Some people are actually winding down and spending less. Quite frankly, I'm finding that most of my clients are ramping up. They're taking longer vacations. They're taking vacations out of the country. They're actually buying larger homes. So it really just depends. But what you should start to think about is the amount of money that you have saved and earning at least a 4% return, because if you can earn at least that 4%, which is the number that we discuss, is sort of like that guaranteed number. Perhaps you get it through lifetime income with an annuity, a pension, or maybe it's a stock and bond portfolio, but you don't want to touch the principal. So for example, if you have $100,000 saved and you're able to pull the 4% for withdrawals, that's $4,000 a year to supplement income. If you have $1 million saved and you're able to draw the 4%, that's $40,000 a year in income. And again, how can you create the lifetime income streams? That's something that we could certainly talk about more either during the Q&A or offline, but there are ways to do that. And there you can see a list of them, like fixed annuities, variable annuities, stock and bond portfolios, depending on how you're allocated. The next slide, please. Social Security. Again, stay in the conversation around financial education, financial literacy, because things are changing. Again, people are living longer. Social Security benefits, fortunately, with inflation and what have you, they are going up, but the average Social Security benefit is not enough anymore. There are other things that you should be aware of. For example, Biden has rolled out it's sort of under his tax plan. It's a new act called Secure 2.0. And in there, it's actually more beneficial toward retirees. So you used to have to take out withdrawals at a mandatory age of 70 and a half, and then that number went up to 72. And in 2023 now, it's 73 years old. So that's really, really important, because if you don't take the money, you could be taxed. Again, think about all the sources of income that you might have when it's time for retirement. This is a graph, and it's again that 4% rule, and it makes some assumptions. It assumes that you have $1 million saved, and it basically says if you just withdraw that minimum of 4%, that you have about 30 years in retirement. If you go over the 4%, then you start to drastically reduce the number of years that you would have a lifetime income. So 4% gets you 30 years. If you start withdrawing at 5%, that gets you about 25, and 6% gets you 20. The next slide, please. Now, we had talked earlier about retirement. So retirement for me is all things retirement planning. That could be a 403B, I could help, a 401k plan, a defined benefit pension for business owners. It could be a Roth IRA, which I really encourage people, if they don't already have a Roth, that they consider one. Under the new tax plans and the Biden rollout, they're trying to offer more Roth within the 401k plans. It's really a beautiful thing because at some point in the future, you aren't paying taxes on the withdrawals. And I could get into the weeds with that offline, but I just wanted to encourage you guys that if you're not already investing in a Roth, to look into it. So again, all things retirement planning for me. I have clients that are in the pre-stages as well as the post stages of retirement. Next slide, please. This is really important. I think Shirley talked a little bit about asset allocation. So this is basically showing you a pie chart. And she was saying how important it is to just kind of stay the course in the stock market. As we discussed earlier, 8% rate of return going back to 1998. The rates of return actually higher during the bull market that we had from 2001 to 2022, if you will. The numbers look probably closer to 10 to 12%. But every year will be different. So what's important is the way that you allocate your funds. So for someone that's under 40 years old, you can see an 80% allocation is allotted for stocks, whereas the blue area is 15% for bonds, and the difference is cash. A considerable difference when you're over 60 years old. Now you're at 30% in the stock market, 60% in the bond market, and 10% in cash. Many of you that are on this call might be familiar with the new, what they call target date mutual funds that are offered in your plans. Well, those are now designed to take advantage. So they do the work on your behalf based on your age. So for example, I have a client right now who's about 62 years old, and she started her target fund at about 80% in the stock market, and now she's 10% in the stock market. So big difference, but basically the premise is to take on less risk as you're getting older. Let's go to the next slide. So how can we help? I appreciate Reverend Gerald's bio summary of myself, but I will say that he didn't mention the firm that I'm with now, which is Oppenheimer and Company, and they've been around 100 years. We have a special skill set when it comes to retirement planning, and we offer financial plans to clients, and we don't charge. So for everyone that's on this call, if you're interested in retirement guidance or you want to actually set up a roadmap, that's something that I could help you with, or perhaps you have one in place. I'm happy to review it. Another set of eyes never hurts. These are some of the questions that you could expect if you haven't already started the planning process. And that is, what are the assets? Again, what are your needs? What's the lifestyle? How much you think you're going to need month to month? Have you factored in all your other income sources? Can you afford to retire? Some people are actually having to reset the clock. They're having to do things to supplement income, perhaps work another 3 or 5 years. Many people are right where they want to be. These are things that would be uncovered during the financial roadmap process that we create on your behalf. And I think that's all the slides.
Anita, thank you so much for going through those slides. A couple of things before we get into the chat. I see some activity, so I'm sure we have some questions for both you and Shirley. You mentioned the benefit of a Roth IRA. Can you
Yes.
just quickly touch a little bit more, because everybody's heard of IRAs and the different types, why is the Roth so highly recommended for retirees?
Okay, so it is so highly recommended because what happens is if you have funded a Roth IRA for at least a 5-year period, and you're 59 and a half or older, at that point, you can actually start to withdraw the funds tax-free. Whereas with your IRA, you're withdrawing funds, but you are actually paying taxes on the income that you withdraw. Ordinary income tax, that is. So the money on a regular IRA has been sheltered, it has been tax deferred. Let's just say you're 60 years old and you start to pull the money. You pull the money and you're going to have to pay ordinary income taxes on the withdrawals. Whereas with the Roth IRA, you're not paying any IRS anything. Now, not everyone qualifies for a Roth IRA. So we'd have to get into income levels and so on and so forth for you to actually establish a Roth. Now, what some people do is they actually convert. I see that I have a question in the queue on that. And Roth conversions could be great, but typically what you want to do is you want to fund a Roth conversion when you're having a not so good year, because there is a taxable consequence for moving money from an IRA to a regular Roth. And I hope I didn't confuse anyone, but let me just say this. With the new Biden rollout, more companies are adding 401k to the 401k lineup. There is no issue with funding that. So if that's available to you, I say do it.
Okay. Well, it does look like we have some activity in the chat, and I do see a question in the Q&A as well. So I'm going to turn things over to Jacinda Moden, who is our virtual producer, to share some of the questions that people have asked in the chat.
Yes. All righty, we have a lot of questions rolling in. Our first question is, let me scroll up. For you, Shirley, who is your researcher when you were speaking about earlier about your investment group? Is it someone in your group that's your researcher?
Yes,
Okay.
all of these functions are within our group. And that's why I say we have such a dynamic group, because we have so many skill sets and people who are interested in different areas. And we pool all of that knowledge and talent and we use it in our group. So yes, we do have an in-house person.
Awesome, awesome. Our next question is, what book should you read to understand stocks? They mentioned that they're currently reading Automatic Millionaire by David Bach and a podcast by the Wealth Twins, and they would like to know what else should they add to their repertoire to expand their knowledge?
There's an old classic that I tell people to read, and it's called One Up on Wall Street. And it's by the guy who actually started Fidelity Funds. And I just think that's a really basic, good place to start. I mean, he tries to help people to understand how to buy a company, what should attract you to a company, and to basically to try to have a relationship with or understand the stock that you're buying. So I think it's a great first step.
Awesome. Shirley, is there anything that you would like to add?
No, I agree.
Awesome, awesome. All righty. Could you go in more detail, Anita, about the Roth conversion?
Yes. So what happens is you're basically moving money from either a 401k or from a regular IRA to the Roth because you want the benefit that the Roth is going to offer later on. But what happens is you are taxed on the income, or like say you have an account that's worth $100,000 and you want to move it from a regular IRA over to the Roth IRA so that in the future you're not paying any taxes. It's tax-free for withdrawals, but the IRS is going to tax you on that $100,000 as if it were income. So what you want to do is you want to do the conversion when the account values are lower, or perhaps your income is lower. So I hope that answers the question. I think that it's probably easier to have one-on-ones with people about Roths because there's a lot of variables there.
Yes, and while we're on the topic of Roth, how does a Roth compare to an annuity? That's another question.
Okay, so a Roth is the type of an account and an annuity is the type of an investment. Annuities are offered through insurance companies, and annuities are basically investment platforms that are issued or offered through an insurance company that have benefits. For example, there's fixed annuities that pay fixed rates. By the way, I meant to mention that when we got into how you can create that 4% withdrawal for life. Right now, if you're 65 years old, most insurance companies are offering more than 4. They're offering 5.5% because rates have gone up. Okay, so there's a such thing as a fixed annuity where you get a fixed rate, and then there's another annuity which is very popular called a variable. And the variable, the underlying investments are mutual funds, and they are subject to go up and down based on the stock market. But overall, they can offer you lifetime income.
Awesome, awesome. And before we go to our next question, Anita, can you repeat the book that you recommended earlier?
Sure. It's One Up on Wall Street by Peter. What's Peter's last name? It's on the tip of my tongue. He's the guy who started Fidelity Funds. Peter Magellan.
Okay. All righty. Our next question is, how does a retiree's medical costs figure in your retirement plan?
So what happens is, sorry, for some reason I can't. Okay, here we go. So that's why it's so important to do a plan, a financial plan, because in the financial plan, in the roadmap, we actually have certain sections for like a budget, if you will, and we factor all the expenses in, right? So with all the expenses, including medical care, we give input, which will show you how much it actually makes a difference with the retirement plan. And we're going to have you to allot for more money that you're putting away now for future healthcare costs that will go up. So we factor all that in using inflation rates.
Awesome. All righty. Anita, can you review over your acronyms of SAVE?
Oh yes, gladly. So I didn't get a chance to talk about them as much as I wanted to. So again, S is in Sam, A is in Apple, V is in Victor, E is in Edward. So the first one, S as in save, and the save means start early. So as soon as you start on a job, please take advantage of your 401k or 403b. For those of you that have your own plans, like a SEP IRA, simplified employee pension, or if you just have an IRA, or if you have a Roth, just start somewhere. I tell some people that I know, start with $50 a month, $100 a month, just get started, because it makes such a difference over the long haul. The A, assess your debt. It's so important that when you retire, that you have little to no debt. One of the things that we do is we help you to uncover the debt. So if you have debt, like many do, many of us, what you want to do is you want to start paying the debt off. And it doesn't happen overnight. It's a process. There's a system that we help you with, and you typically want to pay the interest rates that are higher first. But there's a couple of different systems. But again, be aware that the debt exists, and you don't want to take the debt into your retirement years, because now you're dealing with other expenses and other costs that are gradually moving up. The V is valuable financial education. Like this forum, stay informed. Any workshop that you can sign up for, any podcast, learn more about Social Security, your benefits, when you think you want to turn them on. People often ask me, what's the ideal age? Well, you want to make sure that it's full retirement benefit. That's what you want to make sure of. And then, again, that's a conversation that becomes very personal. Some people choose to take it at the very end because they don't need it. Other people say, I'm not sure how long I'm going to be around, and I want to take it while I can. So again, the V is for value that financial education. It is valuable. And then lastly, the E was to explore all of your retirement income possibilities, income in general. Some of you have real estate. That's going to spew off passive income. Some of you have investments. Some of you are in investment clubs. Some of you have pensions, retirement plans. All of these things should be factored into the plan so that we could see what it looks like in the future. That would be future values that we would account for.
Awesome. Thank you for breaking that down. Gives another meaning to save. Shirley, next question for you. How do you fund your investment group? What is your ROI over the 25 years?
Each new member has an amount that they have to pay to get in the club. It's about around $1,000. And then on a monthly basis, you contribute minimum $25, but there is no maximum. So we have some people who put in $500 a month. We have some people who put in $100 a month. It varies from person to person. But the amount that you contribute also determines the amount of ownership in our portfolio. So if I have contributed more, of course, my percentage of our overall portfolio is larger than someone who has been in maybe about 2 years and only contributes maybe $25. So it's proportionate based on how much you have actually put in to the overall portfolio on a monthly basis. The ROI is a really good question. I would say probably the rate of investment. I would probably say from over 25 years, I know it's well over 200%. I'm really trying to think because we get our reports every single month, but we have gained over 200% of our initial investment over 25 years. We started off, like I said, 25 years ago, and I was looking at our 25-year celebration. We probably had a portfolio valued at maybe, $10,000 or so. And of course, now it's in the triple digits, way up in the triple digits. So we're doing pretty good. Yeah.
That's nice. And for those, several of you have asked, will this be recorded? It is being recorded, and you can later see it on the BWAARP website in conjunction with the Los Angeles Urban League.
Just go to laul.org/BWAARP, and you'll be able to hear tonight's as well as every BWAARP session that we've done over the last 2 years.
Definitely. Someone has a question. Well, there is pretty personal, but maybe you can just give a brief overview. Are you all familiar about the defined contribution plan?
Yes, I am. So that defined contribution, defined benefit, basically that's for self-employed people, and you are committed to putting a certain dollar amount away or percentage over a period of time. Typically it's like 5 years. A lot of doctors fund defined benefit plans. They're kind of sort of the old way of creating pensions. So you're self-employed, but you have employees, and typically you have maybe 1 or 2 or 3, maybe up to a few employees, if you will. Again, you have to be really serious about funding on an annual basis, because if you don't commit to these plans for a 5-year period, you could actually be penalized.
All righty. Oh, this is a great question. How do you feel about those programs who charge you thousands of dollars to learn how to trade in the stock market? For example, someone like a Trade and Travel. I don't know if you've heard of them.
I'm not sure if Shirley wants to comment or not, but it's not what we do. I mean, I look at my business more, I mean, I'm a financial advisor, but it's more like a private banker. So it's more of a buy and hold strategy. We don't day trade. And I do know people that do subscribe. I think it's based on your personality. I think a lot of people that were involved with those kind of day trading platforms probably regretted it when the markets pulled back last year. And you probably are finding fewer people that are doing that kind of trading now, but everyone's different.
I strongly agree with that, because there are so many people who are out there trying to separate you from your money. I think it's always wiser to do your own research. And if you decide to go in that direction, I would research the person who is presenting presenting any opportunity that sounds too good to be true.
Research, research, research.
Yes.
All righty. Anita, this is a question for you. Your title says financial advisor. How does that differ from certified financial planner?
That's a very good question. So with certified financial planners, they can only do fee-based business. Whereas with a financial advisor, my clients still have a choice if they want to pay a fee or if they want to pay a transactional commission. But with CFP designations, you typically are just going with a program that is fee-based, and the fees are typically charged monthly or quarterly. And you probably are more familiar with the term WRAP fee, or is that familiar to the group at all? It kind of means all in. And it's typically a 1%, sometimes 1.5%. It just depends on the advisor. But we have choices, they don't.
Okay.
Based on fee structures. It's really just that simple.
Okay.
Oh, one other thing that's important. With a certified financial planner, very often too, they're charging for the plan that we talked about at the end. We don't charge for the plan. And they typically charge, it depends again on the planner itself, but at least a couple of $1,000s.
Okay. So you don't charge, they charge the fee. Okay.
Yes.
All righty. This next question is for you, Shirley. Does the investment club invest in anything other than stocks and bonds?
We don't invest in bonds. We're strictly stock. We only have positions in the stock market.
Okay.
Yeah.
Okay. All right. Next question is.
You can purchase bonds in the stock market, but I'm saying we only invest in stocks.
Okay.
Period.
That's your focus. All righty. Next question is, are SEP still available for self-employed without employees?
Yes, they are. Simplified employee pension, absolutely, yes.
Okay. All righty. Next question is, how do you go about finding legitimate clubs and how are they backed by money?
They aren't backed by money. You have to do that yourself. You have to set up your own structure, but that's why I suggest going to Better Investments. That's the name of the magazine. And they will help you to understand how to set up and maintain an efficient and effective stock investment club.
Okay, so Better Investments magazine.
Yeah, Better Investing is the name of it. I'll put it in the chat as well.
Better Investing. All righty. Oh, yes, Carolyn, it's assets over liabilities. That's on my shirt. Next question is, what's your best advice for people who are over 55 years old?
Is that for me?
Yes, to both of you.
Okay. At what stage of life are they in if they're over 55? Are they still working? I need to have a little bit more background.
Oh, they didn't go into detail. They're anonymous. They just,
okay.
I guess, what would be your general?
Well, I would start off by asking them what their goals are. What do they see in their future? What is it that they're working toward? I would uncover if they have any retirement plan assets at this point. If they don't have any retirement plan assets at this point, it would probably be difficult unless they plan to pull from other income sources like real estate. But if they're behind the curve, it's not too late for them to start here. I would probably suggest that they look more into an annuity with lifetime income, though, if they haven't saved up until this point.
All righty, awesome, awesome. And of course, many of you asked, how can they get a hold of you all? So what is your best contact information website?
I did put my information.
Yeah,
My-
I thought
my
I did
email.
also.
Yeah. And there is a question, is better investing only stocks? No, they cover all kinds of investments, but it's geared towards helping you to understand the mechanisms of working within an investment club.
All right, Shirley, I put your contact in there. Anita, is there?
Yes, I am trying to resend it. Can you tell me if you see it this time?
Don't see it. On the prompt, did you hit everyone for everyone to see?
Maybe not, so I'll try it again.
Okay.
Okay,
I see it there.
yeah. Yeah,
All righty. Are there any other questions? Oh, wait, I did see a question about Rule 72.
oh, yes, yes. So that's an old standard. And again, if you're interested in finding out how long it would take you to double your values, for example, you take the number 72 and you would divide that. We just keep the number simple. Let's just assume that your rate of return is 10%. So it's 72 over 10 would give you 7.2 years to double. So if you started with $100,000, you're earning a 10% rate of return, it would take you 7.2 years to get to 200,000.
Awesome, awesome. Thank you for that. Well, ladies, thank you all for sharing your knowledge and your insight. I know in this webinar, we cannot see each other, but we're going to just give some virtual hands, give these a round of applause. Thank you all so much for, sharing your information with the community. And I will now turn it over. Oh, Anita's info.
I'm still I'm trying to get it to everyone. It's the little, oh, here it is. Okay. Sorry, I apologize for that. To get to everyone, I'm going to try this again.
Okay.
Okay.
Yeah. If it doesn't work, we can send it out.
Please, it's funny because Shirley can see it. I think
She's on. You're on a different.
Oh, okay.
Platform. Oh, okay.
We're on a different platform than the general population.
Okay. Okay. All right. I'm still trying, you guys.
Okay. We'll make sure if anybody needs it, we'll make sure that it gets out.
Perfect. Thank you.
Okay.
And I will turn over to Reverend Gerald.
Jacinda, thank you for handling the Q&A, and thank everybody for their participation tonight. It's been a great workshop. I learned a lot, so I'm assuming that everybody took away something that can help them with their financial future. We want to remind everybody that our next workshop is on May 23rd, and it's preserving your assets in tough times. We've had some tough times recently, and we have a gentleman by the name of Jerron Hamlet, who is a financial planner and also an insurance advisor, who's going to speak to us about how to preserve your assets in tough times. So please tell your family and friends to register for all upcoming workshops if they haven't done so already at laul.org/BWAARP. Now we're going to have some closing comments from the president and CEO of the Los Angeles Urban League, Mr. Michael Lawson. And if there's some of you who aren't familiar with this gentleman, let me tell you that prior to becoming the CEO and president of the Los Angeles Urban League, Michael Lawson spent 31 years and actually retired as a partner for Skadden Arps, Slate, Merger, and Flom, which is one of the largest law firms in the world. And during his tenure there, he served as president of the Los Angeles Airport Commission. And in my opinion, his greatest accomplishment, he was in Obama's cabinet. He was a U.S. ambassador for aviation under the Barack Obama's administration. And there's a story behind that, but I won't tell it because it's too long about Michael and Barack Obama. But Michael, I'm gonna turn it over to you for closing comments.
Well, thank you very much. This has been a fantastic, absolutely fantastic event this evening. Kudos tonight to these remarkable presenters, financial advisor Anita Aguilar and investment club portfolio manager Shirley Worrels. Please just give everybody an extra hand for these two intelligent and just immensely well deserved accolades to both of them. I also want to thank you, Gerald, Chairman of Parkside Economic Development Corporation. This event has been going on because of your leadership, and I want to thank you for that. And Jacinda Moden, I want to for your continued support producing BWAARP. You've done such a wonderful job. I want to thank the staff of the Los Angeles Urban League, Michael Rodriguez, for managing BWAARP's web series platform. And I want to also give a shout out to our new Chief Operating Officer, Ms. Cynthia Mitchell-Hurd, who must be commended for her encouragement and support of BWAARP series as well. Again, this is exactly what we have been talking about since I took over the position of CEO of the Los Angeles Urban League. Our mission is no less than to build generational wealth for our families through investment strategies. And what you just heard are just two strategies of many that have been spoken for during this program that Gerald has been putting together. The information that you learned today is unbelievably important. I spent 32 years working in the financial institutions, working with pension plans, all of the types of plans that were spoken of tonight. These are the tools that will allow you to go into your retirement if you with no issues whatsoever. If you do it right, if you listen to the two women that spoke so eloquently this evening. So listen to this once, listen to this twice, call your friends, tell them that there's information here that they need. Because one of our goals is to rebuild Greenwood, the district in Tulsa, Oklahoma that was destroyed over 3 years, 3 days of rioting. And that was not the only Black Wall Street in the United States that was destroyed by white riots during the 1920s. And that was the time when the Los Angeles Urban League opened its doors. So we're going to rebuild that. And this is the way we're going to do it. So please continue to check our website, laul.org, for information about the work that we are producing. And again, thank you for attending tonight's BWAARP webinar.
Thank
Good night,
you.
everybody. We'll see you on the 23rd. Thank you so much,
Wonderful.
ladies. Shirley
Thanks
and Anita.
again,
Great job.
Reverend
Brother
Gerald.
Daniel
Thank
Leathers.
you, guys. Good to see you, Michael.
Good to see you as well.
All right.
All right.
Good night, everyone.
Good night, everyone.